Most people will never build real wealth from investing, not because the market is unfair, not because they started too late, not because they did not have enough capital, because they never had a framework. Welcome to the ProfitByFriday.com podcast, where we replace guessing with process, emotion with discipline, and noise with one clear idea every single week. Now, let us get into it. Today we are going to cover a little-known company that is quietly profiting every time you fly. Not the airline, not the aircraft manufacturer, not the fuel supplier. A company most investors have never heard of. A company that does not appear in the headlines. A company that works inside the engine, invisible to everyone on board, and gets paid on a fixed schedule for the next 25 years on every aircraft it touches. You have been on a plane before. You buckled your seatbelt, put your bag in the overhead locker, sat back, and waited for the engines to spool up. And somewhere between takeoff and landing, you probably did not think about this. Every single flight cycle that aircraft completes, a 156-year-old company in Fort Collins, Colorado, gets paid. Not by you, not by the airline, by the physics of aviation maintenance itself. The company is Woodward Incorporated, ticker WWD. And the story of why it might be one of the most structurally interesting businesses in public markets right now starts with a woman named Sandra. Sandra works in aircraft parts procurement for a regional carrier. She spends her days placing purchase orders for the components that go into and around commercial aircraft engines. One afternoon, she was reviewing the maintenance schedule for a batch of newly delivered narrow-body aircraft, and she called a colleague to talk through something that had been sitting in her mind. The interesting thing about these engines, she said, is not who built them. It is who is allowed to fix them. Her colleague asked what she meant. She explained that on a modern commercial aircraft engine, the original equipment manufacturer does not simply sell the parts and walk away. They control who is authorized to repair them, the tooling, the certification, the technology access. If an airline needs maintenance on a specific component, the airline cannot call just any shop. They call an approved shop, approved by the company whose name is on the component. And one of the names Sandra sees most often on her purchase orders is Woodward. That conversation is the entire investment thesis in 2 sentences. Woodward does not just sell parts. It holds the authorization to repair those parts for the entire 25-year operating life of every aircraft it supplies. Let me explain exactly why that matters. Woodward makes fuel controls, actuators, and valves for the CFM LEAP engine. The LEAP engine, developed by CFM International, a joint venture between GE Aerospace and Safran, powers every Boeing 737 MAX being produced today. It is also one of 2 options on the Airbus A320neo family. Together, these 2 aircraft types are the backbone of global short-haul aviation. Every new narrow-body aircraft being delivered today almost certainly has a LEAP engine, and inside that engine are Woodward components. Now here is the structure that makes this interesting. Woodward earns money from each aircraft twice. The first time is at delivery. When the engine is built, Woodward sells the fuel controls, actuators, and valves to CFM International. 1 transaction per engine. Margin is good, but it is bounded. It happens once. The second time is the aftermarket stream, and this is where the business changes character entirely. Every 3,000 to 5,000 flight hours, those same components are pulled from the engine, inspected, repaired, or replaced. That happens multiple times across a 25-year aircraft operating life. Each event generates revenue, and each event can only be fulfilled by a Woodward-authorized facility. This stream is recurring, it is non-discretionary, and it grows automatically as the LEAP fleet expands. Think about what non-discretionary means in this context. The airline cannot decide to skip the maintenance. The regulator sets the schedule. The FAA and EASA require it. It does not matter if the airline is profitable that year. It does not matter if the economy is slowing. The aircraft has accumulated the hours. The maintenance happens. Woodward gets paid. Here is what makes this compound. The LEAP production ramp began around 2016. Aircraft delivered between 2016 and 2020 are now entering their first and second major maintenance shop visits. The revenue from those visits is arriving right now, which is exactly why Woodward's commercial services revenue grew 36% in its most recent quarter. Aircraft delivered from 2021 onward add to that stream every single year for the next 2 decades. The fleet compounds. The maintenance obligation compounds with it. In April 2026, Woodward announced that Lufthansa Technik had become the first independent maintenance, repair, and overhaul provider authorized to perform complete repair and overhaul of Woodward fuel controls, seals, valves, and actuators on LEAP engines. The day after that announcement, Air France Industries KLM Engineering and Maintenance signed the same agreement. Most people reading those press releases saw 2 maintenance contracts. Sandra saw something different. She saw Woodward building the authorized repair infrastructure around an installed base that grows by thousands of aircraft every year and does not leave service for 25 years. The Lufthansa Technik and KLM agreements require those partners to invest in Woodward-specific tooling and test equipment. They cannot use generic equipment. They invest in Woodward standards, which create switching costs on their side and long-term commitment from the partners. And it means no third-party shop can simply enter this market by offering a cheaper price. They cannot replicate Woodward's tooling certification and technical data without Woodward's explicit authorization. Woodward holds the authorization. The authorization follows the aircraft for its entire operating life. There are approximately 10,000 LEAP-powered aircraft flying today. Airbus and Boeing are delivering more every month. The maintenance schedule is not negotiable. The fleet is not shrinking. And the revenue from every maintenance event on every one of those aircraft flows through a Woodward-authorized facility. As long as planes are flying, Woodward gets paid. Now let me tell you the second angle that almost nobody covering Woodward is writing about. While the aerospace story is playing out in the skies above us, Woodward's industrial segment grew 43% year-over-year in the most recent quarter. The chief executive stated on the earnings call that multiple customers have recently shared potential increases to their forecasts, tied to data center power generation demand. Woodward makes the fuel injection systems and control electronics for the industrial gas turbines powering those facilities. Every data center that needs reliable on-site power generation is a potential Woodward customer in the industrial segment. 2 structural growth legs running simultaneously, both largely invisible in the current conversation about Woodward as a pure aerospace story. The numbers from the most recent quarter tell this directly. Quarterly revenue hit $1.09 billion, up 23% year-over-year, the first time in the company's 156-year history that a single quarter crossed $1 billion in sales. Adjusted earnings per share came in at $2.27, up 34% year-over-year, beating consensus by 13.5%. Full-year guidance was raised. Total sales growth now expected at 20 to 23%. Adjusted earnings per share guidance raised to $9.15 to $9.45. The chief executive confirmed on the call, LEAP and GTF maintenance, repair, and overhaul volume is growing quickly. Rockford and Prestwick sites are being expanded specifically for aftermarket capacity. The capital expenditure being deployed today is the capacity being built for a revenue wave that has a 20-year runway behind it. Now the risks, because they are real and they deserve equal airtime. The stock gained 90% in the 12 months before this quarter's results. At the current price, the forward multiple on guided earnings is roughly 42 times. That is not a cheap entry. A significant portion of this thesis is already priced. Free cash flow in the most recent quarter was $38 million, against segment earnings nearly 4 times that level. The reason is approximately $290 million in planned capital expenditure for the full year. The capacity being built now has a cost before it generates the return. Slower aircraft deliveries from Boeing or Airbus would compress the LEAP fleet growth rate. A sustained shock to air travel would reduce flight cycles and therefore maintenance triggers. Neither has shown up in the current data, but both are worth watching. Here is the honest summary. Woodward is not cheap, but a business with a recurring authorized maintenance obligation on the world's most widely deployed narrow-body engine, expanding into data center power generation, with 20 years of installed base runway ahead, is not valued the same way as a standard cyclical industrial manufacturer. 42 times on today's earnings is the wrong denominator if the aftermarket ramp has a 20-year runway. The more relevant question is what the earnings look like in 2029 and 2030, when the LEAP fleet delivered in 2022 to 2024 is fully into its maintenance cycle. Each quarter that commercial services grows faster than original equipment part sales, Woodward's margin structure improves. Higher margin aftermarket revenue on a growing revenue base expands earnings faster than revenue growth alone. That is the mechanism that makes the current multiple less stretched than it looks if you anchor on the earnings trajectory rather than today's snapshot. Sandra understood this from the airport lounge without looking at a single financial statement. The question is not whether airlines will need the repair. They will. The question is who holds the authorization to do it. Woodward holds it. This is not a story about one good earnings quarter. It is not a story about guidance raises or consensus beats. It is a story about a 156-year-old company that has positioned its components inside the dominant commercial aircraft engine of the next 3 decades, built a licensed repair network around those components, and now collects an expanding aftermarket toll on every flight cycle those engines complete. There are approximately 10,000 LEAP-powered aircraft flying today. Airbus and Boeing are delivering more every month. Each one will need Woodward's fuel controls serviced multiple times across its operating life. The market can debate the multiple. The maintenance schedule is not negotiable. Amateurs chase the earnings beat. Investors follow the authorization. Visit profitbyfriday.com today. Subscribe free to the Friday Flash, where you will receive one stock fully evaluated through the clear framework every Friday, so that you know everything about the company before you decide to invest. No noise, no hype, just the analysis that matters. We trade for cash flow. We invest boring to build legacy. See you in the next episode. Bye for now.